22-3, preparing a statement of cash flows. One learning objective, you need to be able to prepare a statement of cash flows for a merchandising business organized as a corporation. So corporations are required to prepare an additional statement which addresses the changes in the business's cash for the period. So they have to create this statement of cash flows. Cash flow is the cash receipts and cash payments of a company. So it's just money coming in and money going out. The statement of cash flows is a financial statement that summarizes cash receipts and cash payments resulting from business activities during a fiscal period. So what this statement shows is cash coming in and cash going out throughout that fiscal period. We have three types of cash flows. We have cash flows from operating activities, cash flows from investing activities, and then cash flows from financing activities. Operating activities is the cash receipts and payments necessary to operate a business on a day-to-day basis. So whatever it takes, the money that it takes to keep that business operating, moving forward, that is our cash flows from operating activities. Cash receipts and cash payments involving the sale or purchase of assets that are used to earn revenue over a period of time, that is our investing activities. So anything that we pay for, that we get money from to help us with our revenue is going to be investing activities. And then our last one, cash receipts and payments involving debt or equity transactions are called our financing activities. So here is those three things again: operating, investing, or financing. It talks about ways that we would have cash coming in or ways that we would have cash coming out. This is a really good chart to know because this will help you know as to what activity that falls under. The operating activities section of our statement of cash flows can be prepared using one of two methods. We can either use our direct method or an indirect method. Regardless of that method, the result is going to be the same. Okay, so it's two different ways to get to the same answer. This is just an example of a completed statement of cash flows. So first we have our heading, who, what, when. Then we have our cash flows from operating activities. So it shows under the cash flows from operating activities, we have our cash receipts from, and so we see where we're receiving our cash. Here they are just putting in how much cash they're receiving for each of those things. They're calculating the total of the cash receipts. Then we see we have another section of our cash payments. It's listed as to what we're paying cash for. Now, notice all of these numbers are in parentheses because we're paying cash, so that means we're losing cash. Here they've totaled up what the cash payments were, and then they are figuring out the net cash provided or used by operating activities. So to figure out this number here, we are subtracting the cash receipts and the cash payments to get the net cash. Okay, in our next section, we have our cash flows from investing activities. Again, we have our two different sources. Here's our sale of equipment. So here we're receiving cash. And then we have our purchase of equipment. Notice in parentheses again, because that would be a cash payment. And then the net cash provided or used by investing activities. Now, notice in this case, the sale of the equipment was less than the purchase of the equipment. So here we're losing money. Okay, so it wasn't net cash it wasn't receiving that cash, but it was cash used by investing activities. Okay, next section is our cash flows from financing activities. So we see where we are receiving different money. So we have our issuance of stock, long-term notes payable, bonds, proceeds from line of credit, and then we also see our payment amounts too for those things. Again, the ones that are in parentheses are ones that are going to be paid. It's cash payments. And then we subtract or added and subtracted these to figure out our net cash provided or used by financing activities. This is a positive answer. Okay, so here when we see this full statement together, we see here our cash flows from operating activities. Next are cash flows from investing activities. Next are cash flows from financial activities. After that, we need to calculate our net change in cash. Okay, so here they're looking at our net change in cash. We figured out we're adding, subtracting to figure out what that is. Then we're looking at our cash balance on the 1st, January 1st. And then we're not subtracting, we're adding these numbers, because this is a positive, to get our cash balance on December 31st. Audit your understanding, question number 1. It says, what basis is used to prepare the statement of cash flows? That would be our cash basis. Number 2, list the 3 categories of activities used on the statement of cash flows. This should be easy. I said it multiple times. We have our operating activities, our investing activities, and our financing activities. That was the end of 22.3 lecture. You can now move on to the 22.3 work together.